Welcome back. It's Monday, so we are checking in with our local CPA, Robin Leblanc. Robin, thanks so much for joining us today.
Thank you for having me back.
Of course. So today we're talking about the tax impacts when it comes to buying and selling a home. So what do people at home need to know?
Yeah. So with the current state of the real estate market, buying and selling homes has been really popular on social media and everywhere. So I really wanted to cover what you need to
Yeah.
be aware of. And then I'm even in the process of buying and selling a home. So this is super relevant. So when you are selling your home, it's an asset. And like selling other assets, there may be tax implications. At the end of the transaction, you're going to get that HUD statement or that closing documents that says how much you sold it for. And you may actually have to pay taxes on it if you sold your house for more than you paid for it. And as house prices are skyrocketing, that's something we need to look at. So if you are single, you're able to exclude the first $250,000 of profit. And if you're married, up to $500,000. Now that seems like most people are going to be able to do it, but there's two more rules to know about. You actually have had to live in the house and own the house for at least 2 out of the last 5 years. So if you bought a house and then got married and didn't live in it right after you bought it, you might not be able to exclude some of that gain. There's always exceptions to the rules. For example, if you are in armed forces and you're overseas, and that's one of the reasons you haven't lived in your house. Now, another thing to look at is if you inherit property. So
Okay.
if someone in your family passes away and you get that in a will, you need to make sure that you actually do something like have an appraisal on the property. Because if you sell it, and let's say you sell it for $200,000, you don't want to pay taxes on that $200,000. You need to have something to deduct from it. So that's a lot of things. Appraisals on inherited property is something people overlook. And then when you're buying a house, especially for the first time, and you have that mortgage interest, it just depends on whether or not you're able to itemize. With the current setup of itemized versus standard deduction, which we've talked about previously, you really need to, depends on how much interest you're paying. With interest rates going up, a lot more people are going to be able to itemize on these new homes because you're going to be paying a greater percentage of interest on that house. So overall, it's really important to just keep track of your records.
Yeah.
Make sure you own a house for at least 2 years before you sell it. Like, that's the big thing. Dates are so important when it comes to homes.
Well, Robin, this is all great information for our homeowners out there. Thank you so much for joining us to share this with our viewers.